95% of traders fail their prop firm challenges, and you're probably part of that statistic too. And don't get me wrong, I'm part of that statistic too as we're talking, but that's because of my approach to prop firms right now. This same approach has allowed me to make hundreds of thousands of dollars from prop firms and be able to be a full-time trader. And all because of one single thing, and that was risk management. This is going to be a full step-by-step guide, and you will leave this video knowing what risk management you should use for prop firms on a challenge phase and also on a funded stage, because the way you approach a challenge and the way you approach a funded account is completely different. So let's dive right into the video and let's dig deep. So with the risk management for prop firms, you are going to have access to multiple things. We're talking about the risk navigator, we're talking about the oats system, we are talking about the 3D formula, and all of this is going to be extremely important for you to understand how we approach the markets. And then at the end, you will have the Excel sheet. Risk management is the thing that differentiates profitable traders from unprofitable traders. Traders that will get funded and get payouts, and traders that will never get funded and never get payouts, and they're just feeding the system and we're the ones getting paid out. So for the risk management for prop firms, first, let's talk about what the goal of this video is. An intermediate or advanced trader should not approach prop firms the same way a beginner trader should. You can't give the same advice to every single trader. And this video is here to serve as a guide for you to master risk management for prop firms. No matter what level of trader you are, you will know what challenge size to go for and what risk management to use. That is exactly the goal. And the reason why I say that I'm qualified is because so many people on YouTube make videos like this, and they never mention that you can't give the same advice to everyone, right? So that's why this is a full step-by-step guide on how to do it. Now, the concept, the risk navigator, you're going to leave this video with an exact formula to use for your risk management at every level of your trading. The risk navigator is about giving you a clear path to follow to reach the right formula for you. Whether you're a beginner or already profitable, have received a payout or never received a payout, there is a formula here for you. So the risk navigator, there's going to be multiple sections, and that is for the challenge and that is for the funded. And we have multiple profiles for the challenges and for the funded. We have the student, which is someone that is still aiming to become profitable, and that is completely fine. We've all been through it. I've been through it, my students been through it, and still they are getting funded. Then you have profitable but no payouts, and we have profitable with payouts. These are the 6 profiles that we are going to be looking for, because again, it changes between challenges and funded. Now, the risk navigator also encompasses something that is time, and that is something that a lot of people don't talk about, because as I said, an advanced trader and a beginner trader, they should approach prop firms in a very different fashion. So in the risk navigator time, you're going to have to pick between you taking your time, which you have less risk of failing, but you also have lesser of a reward, or you want fast, which is more risk of failing, but a higher reward, meaning you get funded quicker or you get bigger payouts. But as you'll see, I will not recommend this to everyone, okay? Be careful, because a beginner should not, for example, here, quick spoiler, no, I'm actually not going to spoil this, right? So you either take your time or you go fast. And this is the 3 branches that I'm going to give you. Exactly the path that you want to follow, I'm going to give it to you right here, as long as you watch the video. Now, a word of caution. I don't judge traders who try to take the fast route. I myself take the fast route for challenges, but I don't aim for big payouts. The problem is that we only hear about the success stories. I get messages on a daily basis of people saying they've blown a lot of accounts and never received a payout. Don't let that happen to you. Take your time. And I have a screenshot here of an email that I have that is basically proof of in my response to this person, which is, I've blown many accounts and I can't afford to buy another prop firm. And I just said, stop buying challenges until you find an edge. Because this is the problem, and that's why I wanted to have the word of caution. A lot of traders, they get into the cycle of trying to get funded and trying to get funded and trying to get funded, not understanding that behind every successful trader is a successful strategy, is a profitable strategy. Therefore, you have to be careful not to fall into this trap that prop firms give you, which is the illusion that you are going to be rich, when in reality, they're just trying to take most of your money. So I would be very, very careful with that. Don't let that be one of you. Now, the 3D formula, this is something that I personally came up with, and I call this the 3D formula because it has a 3-part structure, which is we are going to always divide max drawdown available divided by the ratio that you will receive in this video divided by the number of trades per week. The only thing you need to know here in order to apply this is going to be the number of trades that you take per week. So take the average that you have taken in the last year, or let's say in the last 3 months, and that is going to be your number of trades per week. This is going to be important because we're going to play with the max drawdown a lot. So you need to know the max drawdown of the prop firm that you're going for, of the specific challenge that you're going for. So for example, Funded Next, it has challenges that is 10%, it has challenges that is 8%, FTMO has 10%. So there are multiple prop firms that even I am funded with, and they have different drawdowns. Therefore, I use different risk managements, right? So max drawdown available divided by the ratio, I will give you the ratio right here, and the number of trades that you take per week. Now, one of the things for you to keep an eye out is follow the right path. If you are not following the right path, then very likely you are just lying to yourself. No one is seeing how much you are risking. Only you are seeing, only your bank account is being affected by the risk that you are putting on these challenges, by you failing the challenges, by you passing the challenges. So be very careful with what you go for, because it's taken me a long time to put this together, and I don't want you to fail and go broke because of prop firms. So follow the right path. You'll only be lying to yourself. The average trades per week over the last month or 2 months or 3 months, and account size to go for. The ratio also is what I will be giving you at the end. So keep an eye out for what I'm going to say, which is the account size that you should go for and the ratio. These are very important because if you don't follow these steps, the likelihood of you losing more than you can afford to lose is high. So I would be very, very careful with that, right? So let's go on to challenge accounts. Now, for the risk management of challenges, you need to think about some fundamental thoughts, which is skill, time, and risk. Right? Skill, if you are, it's the profiles that we've talked about. Are you the student? Are you the profitable with no payouts, or are you the profitable with payouts, right? Then we have time. Do you want to go faster? Do you want to go slow? And then we have risk, which is going to be what you will receive at the end. So in terms of skill, let's start for a beginner. Time. I'm not going to give any beginner any sort of possibility, even though you can, but I don't recommend, because again, remember that you are only lying to yourself. With time, if you are a beginner, if you are not profitable yet, and you want to go for a prop firm challenge, you can only take your time. I don't recommend you going fast. I don't recommend you risking a lot. So I'm taking my time. This is for the beginner. I am taking my time. Go for a challenge 1/4 of what you can afford. So let's say that you are a businessman, you have a good income, so you don't mind losing a 100K challenge. I would actually recommend, if you are not a profitable trader yet, to go for a 25K challenge. Or if you can afford a 25K challenge, I would actually recommend you just going for a 1K challenge and dipping your feet on the water and seeing what the experience is like before you scale up. Believe me, this is one of the most important tips. And if you are going for challenge sizes that you cannot afford, believe me, you will have a lot of emotions. If you fail, it's going to hurt a lot. And believe me, I've been through that, and it's not good. So for the risk, you should go for max drawdown divided by 2 divided by the number of trades you take per week. So the ratio is going to be 2. So this is your ratio. If you want, basically what you are going to do is you are going to understand, okay, I'm a student, I'm not profitable yet, that's fine. I'm going to go for a challenge 1/4 of the size that I can afford, and then my ratio is going to be 2. So you always go onto the 3D formula and you do max drawdown available. So let's say that you're doing FTMO. So if you're doing FTMO, you would do 10% divided by 2. Divided by the number of trades per week. So let's say you take 4 trades per week, then you're going to have 10 divided by 2 divided by 4. That gives you 1.25% per trade. This is because you take a small number of trades per week. And don't forget this is very, very important. Go for a challenge 1/4 of the size that you can afford. That's why the ratio is only 2, is because you are respecting this, right? So let's keep that in mind. Now, for a profitable trader who has never gotten any payouts, you have two possibilities. You either go and take your time, or you are going to get funded a little bit faster. If you are taking your time, go for a challenge half of the size that you can afford because you're already profitable, right? So if you are able to afford a 100K challenge, go for a 50K challenge. Why? Because it's still going to be decent size, which means it's worth it for you to take the challenge, but you're not going to run through the challenge quick. Therefore, you can afford a little bit of higher risk on the challenge size. So go for a challenge half of the size that you can afford. Or if you want to get funded faster, you go for a challenge a quarter of the size that you can afford. So again, if you are profitable and you want to get funded fast, then what you are going to do is you are going to go, instead of a 100K challenge, for example, you are going to go for a 25K challenge. That's the maximum you should go for, right? If you can afford a 200K, that's a 50K challenge, right? Those are the things that we are starting to put in our minds is, okay, these ratios are dependent on the challenge that I'm buying and how fast I want to go, right? So just keep that in mind. If you want to get funded faster, you're going to blow through one account or two. So you don't want to go for a challenge that you cannot afford, or if you can only afford one challenge, that's what you want to avoid. Now, the risk for both of these is going to be max drawdown divided by 2, divided by the number of trades per week. So notice how it's the same thing as for the beginner, but the beginner is going for the challenge 1/4 of the size that it can afford, while you are going for a challenge half of the size that you can afford. So the ratio is going to be 2. Then if you want to get funded faster, you go for a challenge a quarter of the size that you can afford, and your ratio is going to be 1.5. So once again, let's imagine that we are talking about the funded next stellar 2-step. So the max drawdown is going to be 10. The max drawdown is going to be 10 divided by 2. That is 5. And let's say that you are taking one trade per day. That is divided by 5. And that gives you a total risk of 1% per trade. Now, on the same one, if you want to get funded faster, then 10 divided by 1.5 divided by 5, it's going to be 1.3% risk, right? So the reason why we are not going yet into crazy amount of risk territory, it's because you've never gotten funded or payouts, right? So you want to understand one thing. And this is something that I've understood from a lot of my profitable friends. And that is that you always play the game once you know that you are winning at the game, right? That is what is important for you to understand. You play the game once you know that you are winning, right? So that's why I'm keeping it a little bit more conservative when you haven't gotten funded or any payouts. But you'll notice that once you get into the territory of I've gotten funded, I've gotten payouts, I have multiple funded accounts, that's where everything is going to expand, and you'll see that you'll be more aggressive. But during this time, just take your time, use good ratios, and don't go through many accounts. The last thing I want you to do is go through a lot of accounts. I know many people that have blown their life savings on accounts, and I don't want you to be one of those people, right? So now you know the ratios if you are a student or if you're profitable and never gotten a payout. Now let's go on to the other side of profitable traders on a challenge that already got funded and already got payouts. Right? This is where it's going to become a little bit more aggressive. So if you're taking your time still on the challenge, listen, this is one of the things that is important for you to understand. The reason I'm telling you to sometimes take your time is that this is going to increase the likelihood of you passing a challenge by a lot. And people hate me when I say it, but there is the possibility of you having a 100% pass rate on prop firm challenges. But for that to happen, you need to risk way less. Why? Because if you are a profitable trader, then for you to risk less and go through a huge drawdown, it's it's probably not likely, right? So if you are profitable and you have already gotten funded and payouts and you are taking your time, then go for a challenge half of the size that you can afford, and you are going to risk max drawdown divided by 1.5 divided by the number of trades per week. Your ratio is going to be 1.5. Now, again, we've talked about this ratio. Let's say that is 10% divided by 1.5 divided by 5 if you're taking 5 trades per week. So you are going to be risking around 1.3% per trade, right? But let's say that now you're going to go a little bit more aggressive because, again, you already got funded, you already got payouts. So therefore, you want to play this game because you know you can win this game. Again, be careful. This is not for everyone, right? But let's imagine that that's you. So the risk that you're going to be using is max drawdown divided by 0.8 divided by the number of trades per week. So let's see an example. Funded next 2-step stellar. So we have 10% drawdown divided by 0.8 divided by, let's say, 5, which is currently, my average is actually around 3 on FX. So this is not really my ratios, but I can show you my ratios so you understand exactly how I'm risking on these challenges. So max drawdown, so let's say 10 divided by 0.8 divided by 3. This is telling me to risk 4% per trade, right? But let's not forget, let's say that you enter in 5 trades per week. All of a sudden you are risking 2.5% per trade. Or let's say that you enter in 10 trades per week. You're only risking 1.25. But how many people that are beginners or are students or have never gotten funded or any payouts are already risking 1.25 or more, and they're taking multiple trades every single day? That's where people lose everything, because the likelihood of you blowing this account is actually not that low. Right? When you have 10 trades that you take every single week and you're risking 1.25%. That's why these ratios have been very much thought about, right? So be very careful with that, right? So now you know that if you already got funded and got payouts and you want to get funded faster, you can go faster. And notice, once again, you go for a challenge half of the size that you can afford. Half of the size that you can afford. Right? Because again, the likelihood of you losing is high. Therefore, you need to accept that if you lose, it can't really break the bank. And I would even say that if you already got funded, then this should be like, I don't know, 1/50th of the size of what you can afford, right? But let's say that your disposable income is, I don't mind losing a 100K account every single month, and you're not even counting trading profits, then you go for 50K challenges if you want to do this. But once again, you have to be extremely careful, right? So this is all for challenge accounts. The goal is to get funded. This is for challenge accounts. We do the exact same inside of Funded Trading Blueprint. We've even launched recently a futures funded accelerator that has already gotten multiple traders funded. And that is because they know how much they should be risking and they know what challenge size they should be going for. The same thing with CFD prop firms, that if you want to get funded, this is the exact risk that you're using. And it's no wonder that so many traders inside of Funded Trading Blueprint are profitable, right? And if you want to join, it's going to be the first link in the description. And the price is very likely to not stay the same for a long time. But let's now go for funded accounts. Now, for funded accounts, it's a little bit different because the fundamental thoughts are skill, the number of funded accounts that you have, and the consistency at which you want a payout. Do you want bigger payouts or do you want consistent payouts? And let me tell you right now, I like consistent payouts. My payouts are not huge. I get $2,000, $3,000, $4,000, $5,000 payouts here and there. You're not gonna see me getting a $50,000 payout anytime soon. My biggest payout so far was over $30,000, but still, that was because I was risking way more, right? So, skill, number of funded accounts, and consistency. Now, for the skill, we are going to divide it into two. You don't have previous payouts and you have previous payouts. This is going to be very important. So if you don't have previous payouts and you get funded, you've gotten funded right now, you either want consistent payouts or you want a bigger payout. Let me tell you one thing. If you are now funded and you don't have previous payouts and you want a big payout, I want you to ask yourself why. Because a lot of people, they come into these prop firm challenges and they just want payout. They forget that this game is rigged for them to lose. If you don't have an edge and you don't know what risk management you are going to use, you are going to lose, right? So this is rigged in a way that will make you lose in the long term. So I want you to rethink why, and then once you come to your senses, you will understand that first, when you don't have previous payouts, you want consistent payouts. Now, this is dependent on the number of funded accounts that you have. If you have one funded account, 2 to 3 funded accounts, or 4+ funded accounts. And the risk that you are going to be using for all of these is going to be, for one funded account, the ratio is going to be 4. For 2 or 3 funded accounts, and don't forget, you want consistent payouts, 2 to 3 funded accounts, max drawdown divided by 2.5, divided by the number of trades that you take per week. 4+ funded accounts, it's going to be max drawdown divided by 2, divided by the number of trades that you take per week. So let's imagine that we have a next funded account. So we have 10 divided by 4 divided by, let's always keep 5 because I don't know, 5 is just easy. So if you have one funded account and you want consistent payouts, so 10 divided by 4 divided by 5 is going to be 0.5% risk per trade. The reason why is this allows you to go into drawdown and not blow the account. Because for you to blow an account using 0.5% risk, you need 20 losing trades in a row if you stick to good risk management. So that is what I want you to understand. 0.5% risk max per trade, right? Then if you have 2 to 3 funded accounts, again, the ratio is 2.5. So let's imagine 10 divided by 2.5 divided by 5. So let's do 10 divided by 2.5 divided by 5. And that is going to be 0.8% risk on each account, because then we are going to use the oats system, which I'm going to explain very, very soon. Right? If you have more than 4 funded accounts and you've never gotten a payout, you're just stacking funded accounts. For example, there are times where in my trading, I just focus on stacking funded accounts instead of actually getting a payout. I just want to stack because then I can trade with bigger risk, bigger size, right? So the risk that you're going to be using is max drawdown divided by 2 divided by the number of trades per week. So let's imagine from the next 2-step stellar, so 10 divided by 2 divided by 5, that is going to be 1% risk per trade, right? This is if you have 4+ funded accounts, and then you are going to use the oats system that I'm going to be talking about very, very soon. Now, last but not least, is going to be if you have previous payouts and you want consistent payouts or you want bigger payouts. Okay, let's go first with consistent payouts. I've told you, this is me. I like consistent payouts. I'm not getting huge payouts. I know a lot of traders that do, but I also know the stress that they went through on the back end. I'm just a happy guy. Like, I'm happy with my results. I make great money from trading every single year. Right? And that's the only thing I care about. I want the consistent payouts hitting my bank account. That's the only goal in trading, is to get money out of the market into your bank account. Doesn't matter how, right? And by the way, the oats system and the consistent payouts is what I recommend to a lot of funded traders inside of Funded Trading Blueprint. So do keep that in mind. Now, it all depends on the number of funded accounts. If you have 1 funded account, if you have 2 to 3 funded accounts, or 4+. So once again, we are going into, you want consistent payouts, right? And you already got previous payouts. So the ratio, if you have 1 funded account, is going to be the same. It's going to be 4. If you have 2 to 3, it's going to be 2.5. And you have 4+, is going to be 2. So notice, consistent payouts, doesn't matter if you have previous payouts or you have payouts before, it remains the same. And the reason why is because consistency is key. And the risk management that I'm giving you here, it's going to be perfect for you to follow to get consistent payouts, even if you've had previous payouts, right? So that is the one thing to keep in mind. And then if you have 2 to 3 or 4+ funded accounts, you use the oats system. And last but not least, if you want bigger payouts, and this is only possible if you already have previous payouts. And yes, you can do that if you don't have previous payouts, but believe me, I've tried and it didn't work out great. Right? Thankfully, I'm here. I've gotten big payouts. Doesn't matter. I've had a lot of experience. I've coached a lot of people getting funded and getting payouts, and it has never worked out nice when they wanted big payouts and they never had previous payouts, right? So if you want bigger payouts, you already got previous payouts. If you have 1 funded account, your ratio is going to be 2. So notice how we are using the same ratio as someone that wants consistent payouts and it has 4+ funded accounts. Then if you have 2 to 3 funded accounts, it's going to be max drawdown divided by 1 divided by number of trades per week. And you have 4+, it's going to be max drawdown divided by 0.8 divided by number of trades per week. So notice how much we are risking on these challenges. So 10 divided by 2 divided by 5, we're risking 1% per trade on your 1 funded account. Right? If you have 2 to 3 accounts, then we are doing 10 divided by 5, so you're risking 2% per funded account. Right? And if you have 4+, then you're doing max drawdown divided by 0.8 divided by number of trades per week. So 10 divided by 0.8 divided by 5, let's say 10 divided by 0.8 divided by 5, then you have 2.5% risk. I would tell you one thing if you've gotten this far, and that is that, and by the way, always use the oats system. One of the things that is very, very important is that I would actually not recommend you risking more than 2%. And the reason why is prop firms hate it. And I don't want you to also get your payout denied. So I wouldn't risk more than 2% ever on a funded account, right? If you want big payouts and you have multiple funded accounts, I still don't recommend you risking more than 2% on your funded account. I know a lot of great traders that were risking 2, even 3 and 4 on funded accounts, and they all got banned. And that's one thing that I don't want to happen to you. So you can see how the risk management that we're using for challenges and for funded accounts is very, very different. And that's why this video is already so long, but it's a full guide that gives you the exact step-by-step on what you should be risking at every step of your journey, right? If you don't follow this, which I've put so long in order to get to these ratios, to come up with these formulas, to come up with the systems, to come up with the Excel spreadsheet that I'm going to give you right at the end, I don't know what to tell you, right? So now let's talk about the oats system. It's called the 1 at a time system. And that basically means that I want you to actually rotate the accounts. This is where you have to understand, okay, if you have 2 to 3 or 4 plus funded accounts, the best thing you can do is use the oats system or oats system, right? If you have multiple funded accounts, let's say that you have 4 funded accounts. Let's say you only have this, you don't have these, right? Then you're going to trade 1 funded account. You're going to use the risk that is given to you right there, right? Again, could be high, could be 2%. And then once you profit, doesn't matter if it's a break-even trade in which you got $100, $200 profit, whatever it is, you lock in the payout, you move on to the next one. Then this next one is on hold until this funded account has some sort of profit. Then you leave this one aside and you go to the next one. You use good risk management, again, as we've talked on the left. And then once you profit, it can be 1%, it can be 2%. No matter what you profit, it doesn't matter if it's $100, which pays your grocery bills for maybe a week. Doesn't matter if it's $2,000. You always lock in the payout and you move on to the next account, right? You want consistent payouts and even big payouts. This is how you do it, right? Now you go on to the next account. Now, why is this so good, right? You understand what I'm talking about. You simply lock in profits, move on to the next one. Lock in profits, move on to the next one. And again, as I said, there have been payouts that I have received $200 from a 100K funded account. I don't care. $200 pays for my electricity bill. Isn't that great? Isn't that the goal with trading? Is to be able to pay yourself from the profits you made from the market, right? Doesn't matter if it's simulated capital. I don't care as long as it hits my bank account, right? So that's what the oats system is. And this is what has completely changed the way that my students inside of Funded Trading Blueprint see the market, right? And have gotten consistent payouts because of this. We've had students going full time. And the number one thing I tell them is use the oats system, right? Use the Excel spreadsheet. Use these ratios and don't risk more than that, right? Because I don't want you to get hurt. I don't want you to get hurt. I want you to win this game. I'm here, and the goal of Funded Trading Blueprint is to get the most amount of traders funded as possible, right? It's going to be the first link in the description. And if you want to join us, we have so many funded traders. You are seeing so many certificates popping up right now. There will be a point where the 6-month subscription will not be available anymore. Only the yearly subscription will be available. So make sure to take advantage of it as we still have low prices in 6 months. So with that being said, that is everything I've learned about risk management for prop firms. If you want the Excel spreadsheet, it's going to be the second link in the description. Okay, this is where you are going to put in your ratio and it's going to tell you exactly how much you should be risking per trade, right? So this is exactly the risk management that you should be using. This is the step-by-step guide, risk management for prop firms that you need. It's the only one you need. And so with that being said, I hope you enjoyed. Let me know in the comment section what your favorite takeaway of this video is, and I'll pick one of you that leaves a comment with this emoji to receive a challenge account. Hope you enjoyed this video. Click right here to watch the full guide on getting funded this year. And if you're looking for a reputable firm to get funded with, then Funded Next is the way to go. Click right here and use code Kimmel for 120% refund. And if you're struggling with overtrading, you already know Trade Blocker is the way to go.